We are live, folks, streaming on your TVs in Texas, Louisiana on the Smart Money Culture.tv network. And we are broadcasting, of course, on X and YouTube and all of our other sources. We're looking
All
at,
the other places. Good morning, Sir David Porter. How are you?
I'm fantastic. I'm David Michael Porter, and I've been working with Bruce for over 10 years and counting. And we've been around the world doing all types of conferences. We've been specializing in tech, early stage technology startups, and making some business investments and throwing amazing events as
Oh,
well.
that's true. We have thrown. It's like I said. Like I tell people, all the best parties I've been to have been our own parties, which is always something else. Of course, we've been in that business for a long time. We used to throw massive events for, I guess, names I won't drop at the moment. But it is there's a lot going on today. Of course, we are live on your TVs in Texas and Louisiana. We thank you for joining us there as well. Make sure to follow David on X, Sir David Porter, as well as myself at Networks Manager. Matt Dixon will be joining shortly, and he is MD Trade. So make sure to give us a follow. You can always talk to us on there as well. Big pump up this morning, really coinciding. It appeared to me with the news of the warship, the Russian warship, coming down. It's pretty rough. 50 guys dead. A lot of people dead over there in that war. But so that ship was sunk. Ukraine sunk a warship, a Russian warship. Remains to be seen how Putin and the Russians will respond to that. They have historically been responding pretty heavy-handedly, but I don't know if they're waiting now to see if Trump is going to get in office or not. So we'll see. Markets, though, you can see here. I'll just pull this up. Really responded. I said yesterday, the Bitcoin price likes war. It's a risk asset. So, and plus if there's a lot of war, then there's a lot of money coming in. So you see a bit of a pullback here, but it went up to 51,686. So you can just see here how it goes here. Boom, boom. And this is actually what Matt was pointing out yesterday here, how things let's see here. I think he had it more like, anyway, I don't know what the hourly chart was, but it come out to the side and then boom. He was predicting it would probably go up a bit higher. You can see there, big pump up, a big pump up, as they call it. The Dow futures are Dow futures. There we go. Are gaining as well. Theirs are up since I posted them on my X account a little bit, and so it looks like we're going to have a good day all around. Of course, yesterday was a fairly big decline in the Dow, so not surprising that today would rebound a bit. Gold is also rebounding a bit. So now it was interesting because gold went down on the news. So you can see here right 2 hours ago, as the news came out, gold took a dive. And if I go right back to where I was on my Bitcoin chart 2 hours ago, boom, here we go right here. This is like the 3 to 4 hour push up right there, which coincides with that news. Everybody's pushing for this 98, 95. It's really 98, and it's 98 in my head because there's 3% payment that we're going to have to pay the Federal Reserve in order to use that money. So the Federal Reserve is going to front the money to the U.S. government, and $95 billion. and then they're going to charge about nearly $3 billion in order to loan money. It's really our money, because then they're going to tax us via inflation, and that's the whole sneaky thing about it. It really makes you upset if you start thinking about it. Taxation without representation.
Mm-hmm. Yeah.
You know, no representation at the central bank, this private entity called the Federal Reserve, and they can just tax you whatever they want, and it's not a very healthy system.
Yeah, funding wars and causing a lot of devastation is terrible.
Well, actually, I think it was Elon who came out with it, and I don't know where it was, or maybe it was Tucker. Actually, it was Tucker, wasn't it? James sent that clip. That was a good clip. Maybe I should pull that up. Our brother James sent over a clip, and it talked about how, you know, if we have, here it is. Let me see if I can load this up real quick.
How somebody is against stopping a war. The United States is, for this moment, the most powerful country in the history of the world.
Yeah, this is worth watching. Just take me a second to load it up, because it talks about how, you know, we're the most powerful. The U.S. is the most powerful country in the world, and you know, we're like the big brother. I think this is the clip, and the big brother is supposed to protect.
Well, the father,
the little brother. Come anyway. They'll say it better. So let me go ahead and share this tab. Back over here. Add to stage, and boom.
To continue war, how somebody is against stopping a war. The United States is, for this moment, is the most powerful country in the history of the world. So if you were to frame this in terms we're all familiar with, which are the most basic terms, the terms of the family, the United States would be dad, would be the father. And the father's sacred obligation is to protect his family and to restore peace within his walls. So if I come home, I have 4 children, if I come home from work and 2 of my kids are fighting, what's the first thing I do? Even before I assess why they're fighting, before I gather the facts and know what's happening,
I stop the fight.
I stop fighting.
Yes.
So if I come home and I have 2 kids fighting and I say, go, beat the crap out of them, I am evil. Because I've violated the most basic duty of fatherhood, which is to bring peace, because I have the power. I'm the only one who can bring peace. And so if you see a nation with awesome power abetting war for its own sake, you have a leadership that has no moral authority, that is illegitimate. And I mean that too. And I'm not even referring to any specific region or conflict. I mean generally. And I'm deeply offended by that, deeply. And it's something that I try to express, and I'm often called a traitor for saying that. It's the opposite. I say that because I believe in the United States. I think it has been a morally superior country. And if we allow our leaders to use our power to spread destruction for its own sake, that is shameful. It's a binary, okay? It's a black and white. It's a 0 and a 1. You are either creating or you're destroying. You're improving or you're degrading. And that's how you know whether something is good or bad, whether it's virtuous or evil. If you just judge the fruits. By its fruits you will know it. And I'm very distressed and concerned that we are entering an era where this awesome force for good is instead being used for evil.
2 quick questions.
I mean, pretty interesting. He lays it out. He lays the case out very well.
yeah,
You know, if like we're the father, right? We're the father. We're the big brother. And if we can either influence the world for peace, or we can influence the world to go around and kill themselves. And right now, we appear to be influencing the world to drop bombs on each other and kill each other.
Yep.
It's not cool. It's not cool.
No, not at all. Because they're taking our resources, to do it as well.
Yes. Is there a coloration here? Well, that's a typo. Is there a coloration here? I think that's supposed to be correlation. What do you think? 10 wars, 0 charges, funny. 0 wars, 78 charges.
Yep.
Yeah. Top offense. I mean defense. Budgets in 2023 by country. Almost $1 trillion United States spent.
Yeah,
$900 billion. Closest was China. Russia, about $100 billion behind that. If you took China and Russia and put them together, you would have about a third of what we spent. Now we overspend. We pay too much. The U.S. dollar index, and I know, of course, Matt will talk a lot about this stuff, but it's holding its gains up nearly 1.5% over the past month. I talk real quick about the government budget again. Let me just play this.
Spending rate. It's unbelievable how much. And when I talk about the tax rate too, guys, so the tax rate is the government spending rate. The government's budget is always balanced. It's always balanced. There's no such thing as an unbalanced budget. Every dollar that's spent, they take from you. And they either take it from taxing you or they take it from inflation. It's unbelievable how much. And
really important that people understand that everything that they're sending overseas, we are getting taxed for it. They're just they're doing it sneaky so that we don't realize, that people don't realize. Here I talked about the Bitcoin pump timing coinciding with the release of the news that Ukraine sunk the Russian warship. Do you think there is a correlation? Actually, I don't even need to scroll in there. Ukraine says it destroyed a Russian warship in the Black Sea. Camden has decided he's going to come out and hang out with me this morning here. If you can see him here. I can't get on my screen now, buddy. Okay. Silver down about 0.5%. That is rebounding a little bit. You can see right there at that 2-hour mark, like I was talking about, everything took a dive except for Bitcoin. Bitcoin went up. Gold, same thing. Edging up right around that $2,000 mark. The natural gas continues to fall, currently trading at 167. We're about to go on commercials on Smart Money Culture. We just did. Okay. And we're going to bring in Matt right after that commercial break. Oil pushing a little higher, trading at about $78. It has been edging upward. The Hang Seng index is up about 1%. NASDAQ futures up. Dow futures are up. You see it's about over 100 down. I wanted to talk though about, I'll tell you what it is. Bitcoin is bumping. It was currently trading at 51,517. And right now it's just kind of floating around here, 51,200, still holding pretty strong. To save money, maybe you should skip breakfast, the Wall Street Journal says. The Wall Street Journal. Gabriel T. Rubin says. All right, this is what I wanted to talk about here. Iran confirmed the pipeline attack was an act of terrorist sabotage. The attack targeted several different gas lines with at least 2 explosion points. Do you think this is why the former CIA director Mike Pompeo was dancing with the Israelis near the Gaza border earlier today? Look at this. Are they celebrating this? And that they know they're going to be able to push through the money? I think this is the pipeline that got pushed up. I think, and I know people are hopeful and they think Mike Johnson is going to stop this bill and everything else. I don't know. I've been in Washington a long time. This thing's passed the Senate. There's $95 billion at stake. You can imagine what what is everybody in Congress? What kind of cut do they get on that? whether it's direct or indirect. I mean, is it 6 figures? I would have to think at least 7 figures, very likely. 8 figures, also likely. 9 figures, possible. So the thought that that's not going to make it through Congress, I think, is kind of wishful thinking. I think that's wishful thinking. I think that it's going to make it through Congress. I think it's going to make it through the House in one shape, manner, or form. And they already have it past the House. And Speaker Mike Johnson was put in as the House Speaker by unanimous vote. Every single person voted for him. And we're back in Texas and Louisiana. Thank you for joining us here on Smart Money Culture TV. We have with us here the great Matt Dixon. How are you, sir? Matt Dixon.
Hi, good morning, everybody. Morning, David, Bruce, and America. Great to see you again.
Always a pleasure, sir. So crazy day, of course, some of the stuff we were just covering, and then, of course, the market's responding one way or the other, really. But
yeah, absolutely amazing.
What's your take on
So
everything?
it's just amazing how things fit in. I mean, I wanted to look today, obviously in the aftermath of yesterday, the CPI figures, but also what's happening in the overall market, and in particular Bitcoin. It's actually beaten my expectations for the time being. It's gone beyond, and we'll look at what's happening there. But it's actually interesting. I did do a talk on CNBC. I was interviewed on CNBC more than 2 years ago now. And I said that at some point, I expected we'd get a big setback on Bitcoin, which of course happened. Then I said, at some point, I believe it will transition from a traditional risk asset, which goes down when there's risk in the market, to basically a safe haven asset, to become true digital gold. And that appears to be what's happening. And I've got some correlations I'd just like to look at just to see what has happened just very recently, that Bitcoin is behaving in a different way than it used to. And I think it's because it's becoming bless you, Bruce.
Sorry, I just tried to go for the mute button. I couldn't get it fast enough.
I think it is becoming more of a mainstream asset, but actually safe haven asset. Because of its limited supply, we know the dollar has effectively unlimited supply. And we're actually going to go into a lower cash to stock ratio, cash to flow ratio than gold at the next halving. So Bitcoin is changing its fundamental characteristics. And I think it's really interesting to see that. So I'll go to my usual and just, I don't know, by the way, about what's happening with Israel. But I know there's a lot of discord with the way Israel are pushing forward with what's happening with Hamas and Gaza and so on. So I don't know. It's hard to tell. But if you were in Israel's shoes and you're being basically attacked, and they want to annihilate Israel, I think you'd also, in America's position, would want to protect themselves and basically go out to. So you've got to see both sides of the story, and try and understand it from a wider perspective. So I think I'll probably start, and I hope you can see this now. If I'm sharing my screen.
Yes, there we go. Oh, we're in the green. We're in the green. Yeah,
so it's quite interesting. As Warren Buffett always says, basically buy when there's fear. Blood on the streets. That's when the dial is right back here in a fear scenario. Right now, we're getting quite advanced in terms of the greed. So most people are positioned long in the market. There's great greed. Everyone's chasing it at the moment. So definitely time to pause for thought. But obviously at the moment, the market, don't go against a trend. The trend does definitely appear to be higher for the time being. Here's actually some interesting, this is from TradingView, and they monitor an awful lot of technicals, which aren't really predictive, but it actually is a really good snapshot of where we're at in the market. And looking at oscillators, the summary, and the moving averages, these are kind of traditional technical type of indicators, which, as I say, not really predictive, but they do show you where the market's at. And at the moment, strong, buy, strong buy, strong buy for Bitcoin. It's basically telling you all the emphasis and emotion is on the buy side. And so things can change very, very quickly, as we know. And these are the times that Warren Buffett would say, potentially not necessarily the time to be piling in. But those people who were in early are obviously very, very happy. This is the chart that we looked at yesterday. And this is the reason that we're looking at this is we looked at CPI. And I said it's all about whether the expectations are met or failed or exceeded. Clearly, the CPI came out lower than expected. So this has moved interest rate expectations, at least at the moment, the market is saying out until June, until we get a rate drop, because that's what they're basically saying, that rates are basically appropriate. Sorry, inflation came out. It was a surprise yesterday how inflation came out actually lower than expected. So.
Well, the inflation came out. I think it was higher than expected.
Sorry, you're absolutely right. Higher than expected.
Yes.
Which actually goes absolutely in line with my argument. So It's obviously came out higher than expected, which is why the fall in interest rates has been put back now until probably June. They were never going to raise rates, I don't think, in March. I think the Fed chair made that absolutely clear. They weren't going to raise in March. But
he said they would consider further actions, as a matter of fact.
Yeah. So they've now put back potential decline in rates until probably at least June, and that's because they need rates to be higher to try to tackle this elevated inflation, which is a potential concern for markets. It's still well above the target rate of 2%, and it came out much higher than expected, as you rightly say, Bruce. So with it coming out higher than expected, that basically means it's normally a risk-off thing where money would flow out of risk assets, and that's immediately what we saw. We saw a knee-jerk reaction, and as soon as that came out, we saw a dollar index spike high. And I remember yesterday I said that we're in a rising trend here, and this is looking at relatively short-term, rising trend on dollar index. And so I said that basically we've got higher highs and higher lows. And I said each of those movements up is impulsive, big green candles, and the corrections are pretty choppy and sideways. And so I said the next expected move you would expect from this chart would be to the upside. And if you look at what actually happened, you can see that this is, we got a massive break to the upside when that news came out as stronger than expected inflation, which means that basically money flowed into the dollar, and we saw quite a strong sell-off in the Dow and the S&P and so on. So
I mean, as far as like for the last few years, it was a strong sell-off. Before that, we used to have $1,000 a day. I remember 1,000-point moves, but we haven't had anything like that. 500 is a big move on the Dow these days.
Yeah, we were down at one point yesterday, 700 and something, but it recovered a little bit towards the end. And we'll look at a chart of the S&P just to see exactly what's happening from a chart perspective. But here's the long-term view on dollar index back from the financial crisis, right back 2008, moving forward. And again, we can see we're in a long-term uptrend there. And until that trend is broken, and to break that trend, you need to actually break below this level. So it would potentially mean quite a substantial drop lower to break this upward trend in the dollar. So for now, long-term, both short-term and long-term, we're actually trending higher on dollar index for the time being. That's not to say the trend won't change and won't be broken. I'm just saying for the time being, we're in the uptrend. And that is precisely what happened yesterday. The uptrend just continued. So that was very, very positive dollar, but potentially negative risk assets. So what that brought me to was trying to look at these correlations, and it's really interesting to see. So at the top, we have Bitcoin. In the middle, we have SPX, so the S&P 500. And at the bottom, we have dollar index. So you can see this is just looking back a year from the beginning of 2023. We can see during the early stage, up to the sort of early part of the year, in general, we saw rises in Bitcoin. We saw a general correlated rise. And when we talk about correlated, there are very rarely 100% correlations. There's a percentage correlation. And there is a correlation here. It's not 100%, but they tend to move in a correlated fashion. So Bitcoin moving up here in general, we see the S&P 500 moving up in the same sort of way. And in general, we're seeing the S&P, the dollar index moving down. So when risk assets are moving up, normally the dollar's moving down and vice versa. And, then when we start to see, for example, here, from this point here, sort of mid-year-ish, we're seeing the risk assets moving down. So we see Bitcoin move down, we see S&P 500 moving down. At the same time, we saw dollar index moving up. And then from October-ish, we started then to see Bitcoin appreciating sharply. We saw the S&P 500 appreciating sharply, and we saw dollar index depreciating sharply. So again, these are positively correlated, and the dollar index is inversely correlated. And that holds really true. But what's really interesting is what's happened just recently. And I did say at some point, I believe Bitcoin could transition to becoming basically a safe haven asset, acting like a safe haven. It's quite interesting. We're seeing, dollar index moving up sharply. It's actually interesting actually see everything moving up. So even though we're seeing dollar index moving up very sharply, we've actually seen a sharp move up in the S&P 500 and a sharp move up in Bitcoin. This is quite unusual to see. And it goes against what we've seen in general for the past year. And actually, if you go back historically, it's unusual to see that sort of strong move. You'd have expected yesterday to have seen something different. So We'll just look at Bitcoin. This is what I showed yesterday. Let's see where I might have gone a little bit wrong with that. I think overall, my view is probably right. I think we had a wave 3 here, complete. And I said this was potentially wave A, B, and expecting C down. I think this was actually ABC here. And that is the one problem you sometimes get with Elliott wave analysis, that a correction can actually be complete or it can be part of a larger correction. So that's why I thought potentially complete here. So obviously what you need to do is readjust your overall outlook. So I've looked at the big picture, and that's where I always look. When you're looking at charts, you start off with a big picture, and you hone in shorter and shorter time frames to try to get a clear picture. So this is the all-time high on Bitcoin. This is effectively, coming from pretty much the start of Bitcoin, all-time highs. Then the big fall we had to the FTX crisis, and then moving up. So potentially we either have, potentially we do have an impulse higher. So wave 1, wave 2, wave 3. So all I did was actually move this internal count up. I had this red wave 3 I had here. I just moved it up to here, 4, 5, the 5 here. So I've just moved up these counts a little bit. So the overall look is similar, but I've had to adjust the internal counts to give us higher potential targets. So we do potentially
as well. I mean, 95 billion, that, like we talk about, and, it's not just giving away to Ukraine and Israel. I mean, obviously it's for that, but that money gets pumped into the economy. People know that. They know that this is about to come. And so these are factors. These are the larger factors at play.
That's right. Absolutely right. One of the ways to support markets and to support the economy is to effectively create that money and pump it into the economy. And I think that's what's happening. I don't think that, it's a massive amount of money that's flowing into the economy, as you say, into arms, into reconstruction, whatever it might be. But it's money going into the economy, into business. And that's one of the best ways to spend money, government money, is when it creates private jobs. And I think that will be happening. So that's why there's more money that flows into these risk assets. And Bitcoin, it's a combination of a risk and a safe haven. It's actually a really unusual asset at the moment, but I think it will transition. I mean, it does actually have both characteristics. It's amazing with the limited supply, making it very much a safe haven asset, but also there's massive demand for the appreciation of it. So there's a lot of speculation there as well, and a lot of demand driving it higher. So it's quite an unusual asset. We are overbought on the RSI at the moment. That can actually continue. We saw, for example, back in 2021, massive overbought situation there. We're nowhere near as high as that yet. So potentially, Bitcoin can go higher than that. I will actually just touch on the learn how to trade, because it's important to, there's learning how to trade is not about winning every trade. As I say, nobody's got a crystal ball seeing into the future. that trading is a skill that can be learned. And as we mentioned yesterday, 95% of retail traders lose money, 5%, only 5% make money. And so people need to learn the skill of trading. And that doesn't mean being right 100% of the time. It means managing your losses effectively, controlling losses so they don't become too large, but also ensuring you get more wins than losses as well. So there's the whole range of course options here that you can go into. And you can actually just begin with a beginner package. Just study time of a couple of hours to see if you like it. This one's priced at $250, so it's just something to give you a flavor of if you think it's going to be helpful to you, which I have no doubt it would be. So a couple of self-paced modules with the trading essentials. This is the sign-up link, learnhowtotrade.club, and this is the promo code that has been agreed with Impact Money, the Trade Smart 10. So that will actually give you a 10% discount as well. So it's
I'm pretty excited about getting some people more involved in this. So we'll continue to talk about that, guys. If you learn how to trade, Matt, I don't know if he'll tell you how much money he made last year, but he made a lot. Made a lot of money trading. Now, of course, he's a professional.
I never like to talk about figures, particular figures, but I beat the market by a substantial margin. So if you can beat the market, you're doing something right. And the market, as most people know, did extremely well last year. So I beat the market. And that, I guess, is what people need to know. You need to be able to beat the market in both up and down markets. And if you can do that in the long term, you'll do very, very well. So it's about risk-adjusted returns. And the risk is that if you just match the market, I mean, that's okay. But normally asset managers don't match the market because they've also got all the costs and so on involved in trading. So nobody actually matches the market unless there are a few unusual traders and funds. They're the sort of, the ones that really stand out, that beat the market over a long time. Warren Buffett had this famous bet that these fund managers couldn't beat the market, and they couldn't over the long term. But there are some techniques where you can potentially beat the market, but it's very difficult for big funds to do that. So we can teach you some really good techniques, hopefully to put you in a good position. Before we leave, I would just like to look very briefly, if we can, at some of the immediate charts. I wanted to look at S&P 500. So this is the kind of longer term view. This is the last final fifth wave up, which itself is made up of 1, 2, 3, 4, 5. But what I really want to focus on is what happened yesterday. So I'm going to go right down. We're on the daily chart here to look at that big wave. We're going to focus on this last little bit. So I'm going to go right down to the 15-minute and just put that into, just make it so you can actually see what happened yesterday. Just expand the chart out. See? So yesterday we had, if you remember, I said that we had something called this bearish divergence, regular bearish divergence. I focused on that in yesterday's show and said this was telling us there's likely to be a sell-off in the market. And so likely that we would see some elevation in CPI, which is exactly what we saw. When we looked at the dollar index, that was what we were basically saying. And I said, if you see CPI going up, you're probably going to see a sell-off. Now, we saw a sell-off, pretty immediate, and we've seen a rebound today in the S&P 500. So that is actually broken down into an impulsive move down, wave 1, wave 2, wave 3, wave 4, and wave 5. What's interesting is you measure a Fibonacci measurement from the top to the end of wave 1, transpose it to wave 2. That's what this measurement here is. I measured from the top to wave 1. You can see there, just transpose that movement to wave 2. And it gave you the precise end of wave 3, 2.618. That's 2 times that golden ratio. So that's amazing yet again. Very, very common Fibonacci extension there, 2.618. Then we got a wave 4, ABC wave 4 up, and then a fifth wave down, 1, 2, 3, 4, 5, in a fifth wave down. That's a perfect Elliott wave move, absolute perfection. Then from there, you would expect there to be an ABC higher. So I fully expected we'd see this bounce higher in S&P 500. But because this is an ABC correction, I do expect a further move toward the downside at some point. Whether it comes from here, whether we go a little bit higher yet, within this correction. All I'm saying is we shouldn't go above the start of this move, because that would invalidate this impulsive move down. So I'm expecting a further move down. So whatever the markets are telling us, I do expect there to be a further move down in the S&P. This being 5 waves can be either an A wave, then we get B wave up and C wave down, then we push to new highs yet again, or it can be the start of an impulse down, wave 1, wave 2, wave 3. For the time being, I treat this movement as a correction. This is for the time being. We need to monitor it to see what the actual situation is. But for the time being, even if you count it as an A, a B, and a C, it still means we would expect this to be lows below yesterday's low point in the market. So I think we'll see that coming today or over the next few days. We will see lower to come. So that is something that I'll be looking to trade. The other thing is, very briefly, we can actually see something called hidden bearish divergence here. So yesterday we had regular bearish divergence telling you of a turn in the market to the downside. And that's precisely what happened with the CPI news. And now with this move up we've had today, we have something called hidden bearish divergence. This is where you see a decline in the highs on price and an incline in the highs on RSI. So it's very different to what we saw with the regular bearish. This is called hidden bearish. So what it's telling you here is...
I just real quick, we're about to cut to a commercial break on Smart Money Culture TV. Thanks for joining in Texas and Louisiana. We will be going to a commercial and we'll be right back. Go ahead, Matt.
Yeah, okay. So basically with what we're seeing here is a continuation move. So hidden bearish divergence tells you of a hidden bearish move that is going to continue. So a continuation of this downward trend here. And that reinforces my thoughts that from an Elliott Wave perspective, we've got 5 down, 3 up, and we expect a further 5 down. That is now reinforced by this regular divergence and this hidden divergence, hidden bearish divergence. That reinforces that expectation that we'll see a move to the downside. So from a risk reward perspective, prices can potentially go up to here before that hidden bearish divergence is eliminated. But I would expect the ABC move will turn anywhere around here. And from risk reward perspective, the downside right now potential is much greater than the upside potential. And so from a risk reward perspective, you can place a trade in the knowledge that the downside is greater than the upside, and so risk reward is really good. And that's how you need to structure your trades. Just ensure your risk reward is right on every trade that you take.
Amazing.
Might want to just check oil. It's quite interesting. You know, that pipeline thing in Iran, it's actually virtually not affected the price of oil.
Well, I think that's a natural gas. I could be wrong, but I think that might be a natural gas pipeline. I'm not sure, because everything I read about it said gas, not oil. And then gas took a dive. Natural gas took another dive last night. So
yeah, I mean, looking at oil longer term, looking at the daily chart, each of these candles being 1 day, again, from the bottom, this appears to be corrective because this wave, basically, this wave up here overlaps this wave, and this wave overlaps this wave. So when they're overlapping, it's not an impulsive, it's a corrective count to the upside. There will be resistance around sort of $80 mark, somewhere around there. These previous highs are areas now of overhead resistance. So there will be some resistance there. Whether we break through that, we'll need to see. But again, that would be an area of potential, a good look at risk reward. But from where we are now, it's kind of no man's land. Not quite sure what's going to happen. But I still think there's probably a lot more yet to play out in the Middle East. And as you say, there's still a lot going on with Russia and Ukraine, with the tensions there. And of course, the big worry is that if Russia are backed into a corner, they can do something really potentially quite aggressive.
I mean, how many warships are they going to lose?
Yeah, absolutely. That's I mean, this is just jumping around a little bit here. This is looking at the pound, and I said that the pound is kind of correlated with risk assets.
Yes.
And we're seeing a move down in the pound. Risk assets have moved up this morning very sharply, but I do think probably this afternoon, I expect we may see a continuation of downside with the futures looking good, but I think they're going to reverse.
Yep.
Yeah. So.
Well, and as well, gold is down. Gold. I think it is. Yeah, gold is down slightly. It's trading about $2,003.
I think the gold will come into its own. We've looked at gold in quite a bit of detail on previous shows, I know, and I said I'd expected a little bit of downside short term, but long term, I think gold is actually going to really come into its own as a safe haven asset, especially as we do start to encounter headwinds with the economy. You know, we've said, you know, we've seen this increase in inflation, which was quite unexpected. They're expecting a decrease in inflation, and it actually increased. And they were hoping for it to continue to decrease. And obviously the Fed knew this when they set rates the other day, when they rates changed. They knew this data in advance, I guess, and people were saying, and I was saying, why aren't they lowering rates? Well, this clearly is why they're not lowering rates, because inflation is still a problem. But again, yesterday, we looked at some of the indications, very early indications, that the economy is just beginning to show some signs of slowing in the US, certainly around the world, but just beginning to show the first signs of slowing in the US. So if we have stubborn inflation with slowing growth, that is not a nice situation. And so these things will come into focus, I think, this year.
Yep. Yeah. Well, pretty interesting. Certainly there's never nothing to talk about. There's always lots to talk about. The macro economic and as well political situation is moving all the time, and we have, of course, these high risk assets, these digital assets that are new and moving. I mean, you know, moving big time. I mean, that chart you just had up there, what was that? That was Bitcoin, I think, right?
The last one was Bitcoin. Yeah, I mean, it's shown I still think potentially that it's still potentially a massive ABC move to the upside. It actually fits within that. I've taken the chart off now, but there's still two sides to the story. Nothing is ever 100% crystal clear. If it was, there wouldn't be any such thing as trading. There's always buyers and sellers in the market, and there's always a battle between bears and bulls. And at the moment, right now, the bulls are winning, but it's a battle, a tug of war. And you know, there's never a complete win or defeat. There's always that battle that goes on, and people are both sides of the market. That's what makes the market. There wouldn't be a market other than that. And so it's never crystal clear. There's a tug of war going on, and I think that potentially the rate of, you know, the rate of movement is potentially about to turn if we see things start to, you know, with the US economy, if we do see inflation remaining sticky, and if we do see a slowing of growth. When growth slows, the Fed want to lower rates. But if we're seeing sticky inflation, they cannot lower rates. So what do?
Right. I know. They're going to, the hand is pushed. I feel like we have a lot of situations like that here. I put up a chart yesterday. I think he kind of sat around for the rest of the show, but all the court dates for Trump as well. I mean, it is pretty, you know, we have sticky inflation. We have lawfare like we've never experienced before. You know, 34 trillion in debt. So, and just to kind of break that down for everybody, I mean, that's 34 trillion that we owe the Federal Reserve. That's been borrowed out. It's $1.6 trillion just to service that. And apparently that is the number, if you look historically, the number that they take in for income tax correlates to that number. So the Fed always gets they always get their number. They always get their number that to loan it. It's massive amount of money.
Yeah. I mean, you're right.
It's hopeless to dig our way out, which is kind of goes back to the other thing that you just print your way out of it, and then the whole house goes up in flames.
Yeah, I mean, you can't. I don't believe you can actually print your way out of the situation. But
no, I mean, you would lose the currency. Of course, the currency would go bust.
I mean, It does. I mean, America's in this very privileged position of being the world reserve currency, but all they are doing is kicking the can down the road, and nobody wants to address the problems on their watch. So who's ever in control, whoever president, whichever party's in control, they don't want to face the issues because it's going to be very, very painful. So they just kick the can down the road and leave it for the next administration to deal with, and they'll kick it, and they can kick it for a long, long time. But eventually, the payday, payment comes, and
it's actually a really good analysis, because you're absolutely correct. I think there was a lot of stuff that President Trump wanted to do, but once you get in there, the last thing you want to do is slow the economy. Everything's going like gangbusters. The stock market's going up, the dollar's strong, everything's going good. Let's not mess with it. We're doing good stuff. You want to get things done.
But the problem is, at the end of the day, as you say, Bruce, it's the ordinary person that pays for all this. And, we looked at this a couple of days ago, that real incomes have actually not even grown, really. I mean, yes, they've grown very, very, very slightly, but in the last 60 or 80 years, we look back, and real incomes haven't really grown. So the ordinary people are not progressing at all.
Right.
And they're just basically treading water. And
Yes.
that gets tiring after a time. And this is when you get unrest eventually.
This is when the unrest comes.
Riots.
People are starting to realize it too. Like I talk about it on the show every day. People are starting to realize that the inflation is a huge tax, and we're getting taxed. Yeah. We have no representation on the tax. We don't even. Everybody doesn't. People don't even understand it. They don't understand that.
Yeah. When you put all these jigsaw pieces together, you can understand why there are farmers' riots now around the world, spreading everywhere, because it is genuine unrest where the people who are actually creating real stuff, the real productivity that we need, are not being rewarded. But basically, bureaucracy is the one that is being rewarded, and they're just basically, not creating or producing anything. They're just shuffling papers, and that's why the general public, the masses, are becoming disenchanted and rising up, and that is going to be a major issue.
It will be a major issue. So it's fresh off the press as well this morning. Of course, the EU has now passed some legislation for the immigration and this and that and the other. And it's like, well, I mean, there's already all this people in here. We have the same situation. Of course, Congress impeached Mayorkas yesterday, but it's really just bread and circus. So we impeached Mayorkas, the House. Impeached Mayorkas by one vote. And they just lost George Santos's seat, who they couldn't have George Santos in there. I have no idea why. You know what I mean? But they didn't like him, whatever he was. And so they kicked him out, and then they lost the seat. So now even that one vote, but he's not going to get that impeachment's not going to hold up in the Senate. So it's just, it's just all, but it gets everybody going, and everyone goes on X and they post and all this and support, and all of a sudden everybody's not mad at Speaker Mike Johnson for a minute. And it's just cover, I think, to push through this $95 billion that's going to give everybody this massive payday. It's going to kick the can down the road. Exactly what you're just saying. Because if this doesn't pass, if the $95 billion doesn't pass, then their hands are really pushed, because one, if they have to give the money away and not have Congress approve it, then everybody really understands the deal. So if Congress really has to approve it, because they have to give the money to the Ukraine and Israel. They have to. Otherwise, Ukraine goes bust. We lose the war. Israel is as well. People don't like to mention it as much, but they are also in trouble if we're not supporting that war. I mean, if we're not supporting them, then they're in trouble. They got all those countries around them mad at them. And so it has to go through, so they have to pass it. And I don't know. It's a mess. You can get very cynical the more you know. I was laying here the last couple of nights just like, gosh, this is rough. And as well, I'm a little guy. I don't want to raise so much ruckus that they get too mad at me. You know what I mean? I want to raise enough ruckus that everybody understands, and we can try to change things together peacefully. But I don't want to raise so much ruckus where they think I'm starting to riots or something. You know what I mean?
Yeah. I mean, you're right in a way. I think America has to support, in particular, I'm thinking Israel here, because if this war does widen out to basically include Hezbollah in Lebanon, then that is something that they're saying that Israel can't handle. I think they will handle it, but it's going to be a major challenge for them. And the problem is, if people can't handle a situation, then they get desperate and lash out. And that's what I was just saying about the danger with Russia. If they're pushed into a corner, like a cornered beast or a cornered animal, if they get desperate and lash out and they do something really dangerous. And I think, Israel, I'm not saying they would, because they're actually seem to be a very disciplined nation in terms of what they're doing and with their arms and so on. They are a nuclear armed nation, and I'm not saying they would ever use them, but they have nuclear arms, and this is why we wouldn't want to see anybody with that capability pushed into a corner.
Well, and that's why we need to talk. That's why we need to talk to each other. You know what I mean? Those two sides, they've been fighting over there for thousands of years, and they're probably not going to stop fighting now. And so, a ceasefire or stalemate might not sound good. You didn't finish the job or whatever it is, but that's probably all you're going to get. It just depends on how many poor dead people we're going to have in between. So. And that's the same thing with the Russia-Ukraine war. Actually, they've been fighting for over 1,000 years too, to be honest. If you go over there, like I've said, there's an old statue, it's like 800-year-old statue or something in the middle of Kiev, and he's pointing to Moscow. They were going.
And again, we need to listen to their perspectives. Part of understanding a situation is you need to listen. Even as an arbiter, you need to listen to both sides of the argument. And they would say that NATO has been pushing against Russia.
Of course.
For many, many, many years, and Russia's just pushing back. That's all they're trying to do. So, from a Russian perspective, you've got to understand their side before you can actually come to any, logical decision about what's happening.
It's like my wife always tells me, because if there's like some type of argument or this or that, or some type of not internal but conflict, like. You're probably not going to get everything you want, honey. You're probably not going to be happy, and neither is the other person. Okay, but you guys got to figure out how to work with each other. So wives are good for telling us that stuff, whether we listen or not. Something else. Anyway, well, guys, we've about wrapped up the show here. Another great show. Really a lot of fun. Impact money. With Sir David Porter and Sir Matt Dixon. Can't wait to get over there. I've been invited now quite a few times to come and speak, AIBC being one of them, but I'm going to be doing my Annie play, which is pretty funny. We had 2 days off. Now I'll go back. I'll share some pictures and stuff maybe tomorrow. But it's really a lot of fun with my two daughters doing the show. Pretty special.
Great to see. Yeah, look forward to that.
Yeah, for sure. So we'll be watching things. I think that we'll wind things down. Thanks for watching us there in Texas and in Louisiana. We will be back on live in 5 hours at 11 a.m. And of course, we'll be broadcasting live as well on X, on LinkedIn, YouTube, and all of the other usuals. Cheers.
Cheers, thank you, and look forward to catch up tomorrow. Bye for now.
Thanks, Matt.
Thanks, Matt.